The GST Council is concerned, its final meeting is over and looks like the state GST and the Union Territory GST bill has been passed. There was also some discussion as far as cess on tobacco and beedi is concerned, which is extremely important information that's coming in and will have huge ramifications for listed tobacco companies. But let's take this across to Gaurang Sinha. And multiple questions coming your way, Gaurang. But first up, the state GST and the Union Territory GST bill that people are calling UTGST bill has finally seen the light of day. What are the implications of this, and is it all set to sail through Parliament as well?
Well, Supriya, there certainly does appear that the state GST and the UTGST have also gotten the green light from the GST Council. In fact, we'll be hearing from the Finance Minister very shortly. But this was, of course, passed without very much of an issue in the GST Council. Remember, the government, of course, so far put out drafts of the central and state GST laws, but the UTGST is something which has not been seen by the public so far. So it's going to be crucial as to how the UTGST is treated. But most importantly, the UTGST talks about the taxation in areas of the country, of the sovereign union, which do not fall within the purview of any specific state. So any airspace or offshore territorial waters particularly are important aspects to be discussed when it comes to the UTGST, and that law will of course take care of those issues. Apart from this, of course, you've got the other issues which have been discussed with regard to cess taxation. Those are, of course, also issues which have been discussed in today's meeting. And finally, of course, we've also heard some conversation about tobacco and beedi and how they will be treated as well. And that's something which is certainly going to be very important to the companies.
Gaurang, I will quickly request you to get to a more stable spot because your voice is constantly cracking, and this is a very important story that we're getting for our viewers. And as soon as guests are ready, please do alert me. But Gaurang, also very quickly, I do want to ask you a follow-up question. How do things change? The UTGST bill, which is the Union Territory GST bill, will now come into effect as far as offshore waters are concerned, or as far as airspace is concerned, which does not really belong to one particular state. In some sense, the centre has given up considerable control over that territory, over that area.
That's absolutely right. In fact, the most important change which comes in is the fact that any territorial waters which are adjacent to the state, in fact, will now be controlled by the state as opposed to the centre, and that has very many ramifications in terms of taxation, particularly for industries like the oil and gas industry and wind power, which do operate in those zones. So that's going to be an important change which will come in, and it's very important to note that this has been also legally challenged in the Supreme Court. So this is something which, of course, has been discussed at length, but is certainly up for legal challenge. We are, of course, now preparing to hear from the Finance Minister here in Bhavan as well, and we could try and get you some views from the state finance ministers who are speaking just now.
Gaurang, very quickly before I let you go, what is the sort of discussion that has happened as far as cess on tobacco and beedis is concerned?
Well, Supriya, at this point, of course, that's something which is extremely important. Remember, the government has so far said that the overall sort of rate of taxation on these products will remain the same. But it's critical, this decision of the GST Council, which we'll hear about very soon, because beedis particularly have been kept in the lowest tax bracket so far. And while public healthcare lobbies have so far said that beedis must be treated in the highest tax bracket at about 60%, which includes tax plus.
कमर्शियल प्रोडक्ट के रूप में नहीं है, बल्कि सिनेमा हिंदुस्तान में बहुत एजुकेटिव कम्युनिकेशन मटेरियल के रूप में भी यूज होता है। तो हम सब लोग बहुत कोशिश करते रहे हैं देश में सिनेमा के माध्यम से एजुकेशन देने की, सोशल इश्यूज पर, जनरल इश्यूज पर, और सारे राज्यों में उसको छूट भी मिलती रही है सिनेमा को एंटरटेनमेंट टैक्स में। अब एंटरटेनमेंट जीएसटी का हिस्सा बन जाएगा, तो मैंने इनसे कहा है कि कोई मेथड निकाले ताकि हम जो पैरेलल सिनेमा है, खासतौर से जो एजुकेटिव सिनेमा है, उसको हम बरकरार रखें, उसको सपोर्ट को, क्योंकि अगर हम 400 रुपए की टिकट लेके सोचेंगे एक जनरल आदमी जाएगा एजुकेटिव सिनेमा देखने के लिए, वो मुश्किल है। लेकिन वही अगर हम किसी तरह से 100 रुपए 150 रुपए तक ले आएंगे, तो वो छूट किस तरह से बरकरार रखी जाए, उसके लिए मैंने आज प्रपोजल दिया है कि इसको कैसे बरकरार रखें, इस पर जरूर ध्यान दें। तो होपफुली डिस्कस करेगी जीएसटी काउंसिल।
All right, that's Manish Sisodia in conversation there with reporters. We let Gaurang go to cover some of the state finance ministers, but we'll take it across to a battery of experts who are joining us on the show this evening. We've got S. Madhavan, we've also got Uday Pimprikar, Bhavna, Doshi and Rajeev Dimri who's joining us on the phone line. But let's begin with you, Uday, and the state GST and the UTGST have been passed. Some of the other things that were discussed in today's meeting was SEZ taxation, the cess on tobacco and also beedies. I'm going to take multiple questions on some of those issues, but let's first begin with the passage of the state in the UTGST bill. A lot of experts out there believe that the centre perhaps has bent a little too much to accommodate the needs of the states, and which is why this UTGST bill that wasn't really on the anvil before has now come in the anvil. The taxation power over offshore or airspace that doesn't really belong to a particular state or adjacent coastlines of the state is now going to be covered under the UTGST. Do you believe the centre has given in way too much?
See, I mean, under the SGST, at a generic level, the tax, anyway, the states were entitled to cover taxation till the territorial waters. And to that extent, the SGST will still continue to kind of cover that. So that's not an additional kind of giveaway in a sense to the states. UTGST is related to the Union Territory GST, and that I think is going to get covered and passed by the GST Council. So to that extent, to the extent that tax is applicable to the territorial waters, there's not much that is changing. Of course, services provided pure and supplies beyond the territorial waters till the exclusive economic zone, that would get covered under the central GST or other IGST by the central government and get administered by them, and that I think is will still kind of continue.
Fair point indeed. But I'll have a quick word that will come in from Mr. Madhavan before I move forward. And in fact, flashes on our screen do tell us the finance minister is now seated. He'll speak any moment. So I'll go across to him, and please apologize if I'm cutting you in between. But cess on sin and luxury goods to be capped at 15% under the GST. We were just talking about the cess that was being discussed on both tobacco and beedies. What's your quick word on that, Mr. Madhavan?
Well, if the demerit rate of 28% is kept in mind, and if you now say that they have decided a cap of 15% on the cess, that would add up to in excess of that 40% that we had the council decide on last time. So till such time as the cesses are there, they could theoretically go up to a maximum of 28 plus that 15 on those short list of demerit goods, which is 43%.
The legislative exercise were on before the GST Council. As you know that we have in the past meetings already approved the CGST law, the IGST law and the compensation laws. Today's agenda predominantly was the SGST law and the UT, that's the Union Territory GST law. The officers had already done the groundwork for this. Both these drafts had been circulated, and the 12th meeting today approved the SGST law and the UTGST law. Because of this approval and cross-references, some changes were required, which were really changes to bring all laws in conformity and consistency, were required in the earlier laws which we had approved. And those were also discussed, and those changes were also approved to the earlier laws. So the Council now has granted its formal approval to all the 5 legislations, that is the CGST, IGST, SGST, compensation and the UTGST law. So all these laws now stand approved by the Council. 4 of these laws, CGST, IGST, UTGST and compensation law, will be required to be passed by the Central Parliament. So in the first instance, these laws under the Constitution Amendment approved by the Cabinet, by the GST Council, will now be taken to the cabinet, and after the cabinet's formal approval, they'll be introduced in the Lok Sabha. We'll try and do that expeditiously. The SGST law now will be taken by the respective state governments through its cabinet to the respective state assemblies. That also the states, I'm sure, will be doing it quite expeditiously. Having finished the legislative exercise, there are two important acts which remain. One is the formulation of the rules. Now there are 9 sets of rules and regulations which were to be approved. The law relating to registration, payment, refunds, invoices, returns have already been approved. That is, these 5 regulations or rules have already been approved. There are 4 others which now require a formal approval. These relate to composition, valuation, ITC, and the transitions. Now, when these 4 are approved, in view of the legislations which have been approved, some marginal corrections will be required to be done to the regulations which we have already approved. For that purpose, the officers committee would be sending us by the next weekend the final draft of the 4 balance regulations and the corrections, if any, to the earlier regulations. To consider that and approve that, we'll be meeting in Delhi again for the 13th meeting of the GST Council on the 31st of March at 5 p.m. After these rules are approved, one major action will be required, which is with regard to the fitment of various commodities into the tax slabs. The officers would then be working on it, and in the meeting that is held thereafter, we'll be approving the slabs. Once that is done, we'll be ready for the GST implementation. Hopefully, we intend to immediately after 31st March, once the rules are approved, take up the exercise of fitment of the slabs itself at the next meeting itself. So we will have a sufficient buffer in terms of time between the entire preparatory exercise and the 1st of July, which is tentatively the date fixed for implementation. Thank you.
पहली जुलाई अब मान के चला जाए कि सर सारी दिक्कतें जो थी, सारी जो जरूरतें थी वो खत्म हो गई और पहली जुलाई।
देखिए, ऐसा लगता है क्योंकि अभी तक जो प्रोग्रेस है वो ठीक दिशा में चल रहा है। No, we can take it up even before that. Both Parliament and that exercise is completely independent. These are rules to be framed under those acts. So these are drafts which have been prepared.
So the next cabinet meeting, we can expect these laws to be taken up and then further in the Parliament?
We'll see now which cabinet meeting.
So there was also talk about capping cess on the compensation law. Any clarity on that?
You see, yes, what we have done is that on the in the draft of the compensation law, the capping of the cess has been done, and we followed a principle. And you must keep in mind that these are not the actual cess charges, these are only the caps. Take, for example, luxury cars. If 28% is the tax and the current tax is 40%, तो tax cess तो 12% लगेगा. लेकिन for the purposes of empowerment, we've kept a cap of 15 on the cess, even though we may end up only imposing 12%. So cap is the ceiling. So we've kept a little headspace between what we intend doing and what we, not an extraordinary headspace, but only a marginal headspace. No, they won't. Thank you.
Cap will be applicable on all the goods, sir?
No, the cess will be only on those goods which are going to be used for the purposes, since cess is going to go to the compensation fund. Those 4 or 5 commodities.
All right, that's the Finance Minister. He has spoken, and let's go straight across to our guests who are joining us right here on ET. Now, I'm sorry, Mr. Madhavan, you want to carry forward the point, because I think the Finance Minister has clarified that 15% is giving the government headspace, but it could even be lower, the cap on sin goods.
Yeah, that was exactly my point, and the Finance Minister has clarified that. That's simply an enabler. And just like that 40% which was an enabler in the previous meeting, this also is an enabler. So I do not see the cess exceeding 12% at the outer limit. 28 plus 12, therefore aggregating to 40, I would see it even lower.
Right. Just hold your thoughts there, sir. I do have Mr. Amit Mitra, the Finance Minister from West Bengal, joining in on ET now. Let's play across that interview that he just gave us.
It's been a crucial meeting. Are we now at a point where we can take all of the laws to Parliament? Are we now at a stage where the GST Council is taking that decision?
Well, I think the laws have been discussed threadbare. There are some amendments which will still have to come, which are being drafted. But composition rules, transitional rules, ITC rules, valuation rules, these 4 are still to be discussed. Furthermore, fitment. Every corporate in India wants to know what will be their tax rate. They don't know that. From April onwards, fitment discussion will start, assuming that these 4 rules which are still to be done. Composition, transitional, ITC, valuation.
Would it require another meeting of the Council to discuss these issues?
Immediately, the Honourable Finance Minister will announce, just now has already announced, the next meeting will be 30th of April or 31st of April to discuss these rules, which are still to be discussed.
On March, that is, right? 30th of March.
And then the fitment discussion will start.
That means these laws will only come in Parliament by possibly the first week of March.
The Union Finance Minister, I cannot predict what he will do in Parliament. But these rules also have to be fixed. So these 4 rules, very important rules, are still to be discussed, for which Honourable Finance Minister has said that the Council has agreed on a date end of April.
Which means that finally all of this will have to come into all of the 4 laws, or where do these rules go?
These rules will get attached to the laws. Laws still require some editing on today's discussion. They will have to come back as well on the 30th with the relevant editing, also the wording, the semantics of this. There were many issues that were discussed today which requires restructuring.
Issues around SEZ and tobacco as well have also been discussed, sir?
I cannot reveal to you what has been discussed. I can only say that these have to be discussed again in terms of specificities and drafting on the 30th or 31st of April, March, as decided by the Council today. But don't forget, fitment. Every corporate in India wants to know.
Absolutely.
When is it that they will know what their tax is going to be? That discussion will start from 1st of April onwards. Maybe 4,000, 5,000 items. That is still
All right, that's Amit Mitra in conversation with Gaurang Sinha of ET now. And I think if I were to read between the lines, the West Bengal Finance Minister is almost saying don't think it's a done deal just yet, because the biggest issue is going to be fitment of rates, and that is what India Inc. is watching with a very, very keen eye. Where do their products fall in which category? Let me take this to Bhavna, Doshi, and thank you very much all our panelists for standing by. We've got Uday Pimprikar, we've got Mr. S. Madhavan, Bhavna Doshi, and of course Rajeev Dimri. But Bhavna, very quickly, the real work of the council, I mean, yes, you know, two more laws passed today. There are 4 other items that require a nod from the GST Council. This will all go to the Cabinet, then to the Parliament. But the real task before the GST Council will really have to be fitment of rates. Are we not right? What falls in which category? And that is what India Inc. is rather obsessed about.
Yes, that is true. The tax rate is what we are all waiting for. But as earlier was mentioned by, I think, the Revenue Secretary, that one really need not worry too much about the tax rates, because what he said is that the companies or the businesses can look at the current tax rate, so they can add up the excise duty and the VAT rates, and more or less that is the range in which they would fall in, so 5%, 12%, 18%. The concern is that where it is falling in between 12 and 18, will it go to 12 or will it go to 18? That's a concern which naturally is there, and businesses are waiting for that. But today is a good progress, because now this state GST and the UT bills have been passed. So in a sense, so far as laws are concerned, the council seems to have concluded that they don't have to relook at them, though West Bengal Finance Minister did mention that there are some editing changes, some changes required, editing will have to be done, but perhaps they seem to have decided that it need not come back to the council, so it can move in the next phase. So that's a good progress. And then the rules. So now what we are really waiting for, or the businesses are really waiting for, are these rules. The valuation, which is very, very critical, the Senvet credit, the input tax credit rules, which are also very critical, transition, because the businesses are not able to take decision today as to how the transition provisions will come, and whether the distributors will buy today, will not buy today, whether they are looking at returning what they have bought, will they have to relabel goods, and so on and so forth. So therefore, these are also very critical, the rules.
All right, hold your thoughts there. I want to get in Rajeev Dimri amidst this discussion as well. And Mr. Dimri, the 4 rules that Bhavna is essentially referring to, the ones in compensation, valuation, input tax credit and transition, extremely crucial, and I think this is really the nuts and bolts of businesses. The others passed, of course, very important, which is refund, registration, payments, and of course, once these rules are passed, the 4 that remain, our understanding is that some amount of tweaking and some amount of refining will also be required to the 5 previous rules that have been approved. Are we right?
Yes, you're absolutely right. That while the 5 rules that came out earlier, while they might need to be amended a little bit, but the composition, valuation, ITC transition is the nuts and bolts of the whole mechanism of of the law, how those companies will fold into the new law. So those are crucial. And they need to come out more quickly, because that's what will allow companies to start taking actual decisions. I think some reference was made that what I heard the FM say was that formally all 5 legislation has been cleared, including the consequential changes in the earlier laws has also been cleared today. That's what I heard the FM, at least that's what my interpretation of what he said. Whereas Dr. Mitra, his point was that some of these consequential changes are yet to come up for discussion in the 31st March meeting. Now, what is the relevance of this is that are we ready to take these 5 laws, 4 out of the 5 laws to the cabinet and subsequently to the parliament already, or do we have to wait for the 31st of March, because that's going to be critical from a timeline perspective. The fact that these, there is constant progress at the council level is good to hear, but we are running extremely sort of out of time on a very short fuse. July 1 is the date, although curiously, the FM still referred to as a tentative date, and he was less emphatic about the July 1 date. But all these signs are very, very important for companies to start making actual decisions and implementation. So its time is running out, but certainly good progress seems to have been made today.
Right. It's good and steady progress, but I kind of agree with you there, because if you read between the lines, the finance minister was not as emphatic on July 1 deadline, and the West Bengal chief minister kept reminding us that, you know, fitment of rates is what India Inc. is obsessed about. There are about 4,000 to 5,000 items to be discussed, and that will happen only post April. Uday Pimprikar, how confident are you that the July 1 GST deadline is really doable? I mean, you know, about 20 days back, or at least a month back, it looked very emphatic. It was very assertive that it will be done. Are you as sure about it today? And will there be ramifications if we do delay it by a month or 2 months there?
I think any of these dates, July 1, August 1, September 1, I think to some extent, I mean, it's good to know when it's going to really happen. But I think all of this is a bit kind of hyped up to my mind. I think from an implementation perspective, all companies would need to assume at this stage that it's going to be 1st of July, that GST would get implemented. Any assumption that it gets delayed by any time for that matters, it has an inherent risk to it. And the risk right now is fairly high. I mean, most of us don't even ask ourselves that question, whether it's actually going to be July 1 or later. There's a lot of work to be done now on the implementation side, and all of us, assuming that it's 1st of July, are moving ahead in the implementation. But it would be good to know a specific date at some point of time, because there's a lot of activity to be done as a cutover activity into the new law. And companies will need to plan that adequately, both on the system side, but also on handling their entire supply chain. And some bit of clarity, if it comes around on dates later on, will be extremely helpful.
All right. I also want to address a few informative items that have really come in from our reporters on the field, that the SEZ is an issue that was discussed at the GST Council. They're also keeping an ad valorem provision and a specific duty provision for cigarette and tobacco. So that's the demerit good. Mr. Madhavan, if I may throw this to you, the Commerce Ministry proposal of SEZ, in fact, has been approved by the GST Council. Are we going back to the times when the taxation was distorted, when considering whether it was in the SEZ or outside of it? And would you have much rather liked that distinction to have gone?
No, not actually, because if you do recognize the validity of the SEZ as a construct, and by all reckoning, whether it's the MOC or whether it's the MOF, SEZ as a notion, as a construct, is here to stay, even in the new dispensation of the GST. If that be the case, and if it's the approved policy of the GOI to support and enhance SEZ as a response to export competitiveness, then I would argue that even under the GST dispensation, you would have a separate set of provisions addressing SEZ. Bear in mind that notionally, theoretically, the SEZ is supposed to be outside of India's territory. So how might you tax SEZ physically, supplies into the SEZ from within the territory of India, and exports from the SEZ outside of the SEZ to elsewhere in India and outside of the country altogether? So I do not think that the separate dispensation for the SEZ goes against the principles of the GST, simply because it is an export enclave. Globally also, in several countries which have the GST, you do have separate dispensation for exports. So I would argue that if the fundamental construct of an SEZ continues to be relevant under the GST, then a set of dispensation relevant for the SEZ is appropriate.
Hold your thoughts there, because there's very important information that our reporters are sending us. And pan masala, the ceiling for cess there is 135% ad valorem, and they're also keeping a provision of cigarette and chewing tobacco at rupees 4170 for 1,000 sticks, or 290% ad valorem. Mr. Dimri, very quickly, is that too high, or were you expecting that range to be, considering these were both demerit sinful items?
The math, but if the basic logic of all tax, transition is that we will trim down the exemptions, and by and large, products will move close to where they are taxed today. That seems to be the basic rate policy, which has been articulated time and again. Then even these other products, whether we're talking about luxury cars or a few other items that are meant to be on that, on that category, or tobacco products, whether they are cigarettes or other forms of tobacco, then the basic policy of maintaining a near rate regime must continue. So I at this point in time, I don't know whether that significantly increases, but that policy should remain, because that's what's applying to the rest of the country and rest of the products.
Bhavna, Doshi, you want to come in on that? 135% ad valorem on pan masala and about 290% on cigarettes, or 4170 rupees for every 1,000 sticks there.
I'm not very sure exactly how they are achieving it, because if the tax rate is capped at 40% and most of the products will be ad valorem, so how is this achieved under the law? And some cases, what I heard was that there will also be specific duty. So one will have to really see, because our current understanding is that the rate, maximum rate of GST will be 40%. I mean, that's what they are seeking. So how is it that they are able to bring in this high rate? So would it be outside of GST? That is because excise will continue on tobacco, so maybe cigarettes, tobacco and other tobacco products. So is that the way it is being agreed? Not very clear to me.
I'm actually going to seek that clarification for you and get our reporter back on the line who's put out this information. But I think from prima facie, it looks like those items could be even more expensive. Uday, Pimprikar, you have a view on this? 135% and 290%, or rupees 4170 for every 1,000 sticks of cigarettes. Of course, this is a means to discourage smoking, and this is a means to take people away from chewing tobacco. But the fact of the matter is that this is going to make those items very, very expensive, and in turn go against the whole principle of having that 40% rate for demerit or sinful items.
I think as was mentioned earlier, I think the only way that they can go about imposing these kind of effective rates would be outside the GST regime, really, and to that extent, these rates would can be achieved, I mean, as an excise duty or otherwise. Okay, whether these will these are in turn comparable to the present rates or not, I don't have a view right now. Okay, but the logic has always been to kind of match with the effective tax rates today, and if that's so, then at least it matches the logic on an overall basis. The second bit, actually, I wanted to kind of cover is the earlier question that you had on SEZ taxation, and there's a lot of discussion that still needs to be done on taxation of SEZs. There are a few gaps there that need to be kind of plugged, and a sensitive treatment of that taxation is extremely important, or that taxation of SEZs is extremely important.
Right, Uday.
Yeah.
Up my mic. Uday, just hold your thoughts there, because you know there is important explanation that I want on the story, and Gaurang Sinha is joining us on the phone line once again, and he's put out this information that caps are all on top of 28% GST rate, cap for cess environment. I'm just going to take it across to Gaurang Sinha, and Gaurang, our panel here is a little intrigued to understand 135% ad valorem on pan masala or 290% on cigarettes. Are we talking about rates of over 40%, not just there, but even aerated drinks and luxury cars? I mean, help us understand the math here.
Well, absolutely, Supriya. Let me go item by item just to break this down for our viewers. If you look at the decision of the council today, what this basically has been decided, there is a table which has been set up in terms of the maximum rate of cess which will be applied over the 28% tax. Now, what this means in effect is that the council has given itself room to set a rate up, set a cess above the 28% up to a maximum limit. What this means for aerated drinks, therefore, is that over the 28%, the council has given itself room of up to 43% is what the incidence of tax on aerated drinks will be. Similarly, as far as luxury cars as well are concerned, again, above the 8%, the council has given itself a room of 15% by way of cess, which can be applied, which will again mean that the total tax incidence on luxury cars again can be up to 43%. I must remind our viewers that these are not the rates of these items. These are simply the rates where the government has given itself the room to go up to 43% for aerated drinks or for luxury cars. But the larger decision behind it appears to be to maintain the overall current level of taxation. In fact, this appears to be a resolution of the GST Council that as far as the tax rates of all of these items are concerned, whether it's aerated drinks, whether it's luxury cars, whether it's cigarettes, at the moment when the GST comes into effect, the net tax incidence will remain the same. What the GST Council has done in effect is that at a later time, they may choose to increase the tax rate, and that is when they will, of course, use these maximum ceilings which have been put in place. Just to put this in effect as well, for the other two items, if you take pan masala, for example, a 135% cap ad valorem has been kept for pan masala as well, but that doesn't mean that it will actually be charged at that rate. The government itself has just given itself room, and that goes for cigarettes as well.
All right, so that's an important clarification that's coming in, that because it's at 135%, that's the elbow room, or perhaps the the headspace, as Mr. Jaitley was talking about. The rates will well within be that 45%, like Gaurang was pointing out, and that's a very important clarification that we're picking up at this stage. Mr. Madhavan, you want to come in on that, because the whole idea was to have rates that are consistent, with what the council is doing, and anything like a 135% to 290% is just basically giving elbow room, is just basically giving headspace.
No, I think I want to make 3 points here based on the comments made by the other panelists as well. Also to reiterate and reaffirm some of those comments. The rates that you allude to on pan masala and cigarettes, I believe indeed they are both the maximum rates, which is the 28 plus the 15 under the GST dispensation, and an excise tax sitting on top of that. That is the only way you will reach those levels of 135 and the 270 that you have alluded to. I haven't seen the fine print, but that's the only way in my reckoning this will work. So therefore, I do not think the 135 and the 270 are elbow room within the GST at all. Secondly, I think as your reporter reaffirmed, the cess is a maximum of 15. So the maximum rate of goods, maximum rate of tax under the GST can only be 28 plus 15, which is 43. And as I've already mentioned and commented, I do not even believe they will approach 43. Actually, I will believe that they will not exceed 40. The next comment is with regard to the correct assessment that the tax rate as and when they are determined. Bear in mind that repeatedly we have heard today that the tax rate determination has not even commenced for whatever reason, let alone conclude, and then the GST Council will approve. So while it is largely true to say that the tax rates as will be finally determined will closely approximate the current effective aggregate tax rates on those products, nevertheless, I just want to make a comment based on what the CBEC chairman mentioned a couple of days ago, where in his assessment, there could be a net increase in the GST rate of taxation as compared to the present rate of tax for a certain period of time. Now, the only way I believe that will happen, given the broad principle of proximity to the current aggregate rate of tax would be, where some of those products which will be between the 12 and the 18 would be fitted to the 18 and not to the 12. That's the only way the aggregate incidence of tax could increase in my visualization. So I just wanted to make the point that the 15% maximum rate of cess that was determined in this council's meeting and the maximum rate of tax of 40%, these are merely enablers. I do not believe the aggregate incidence of tax under the GST, even for these list of demerit goods, will exceed the 40. They are only the maximum rates, and they will indeed approximate the current aggregate incidence of tax that currently obtains on these products.
Rajeev, Dimri, will have you take a quick word right away on this. The fact is that the government is giving itself elbow room, but like Mr. Madhavan was pointing out there, the CBC chairman, yes, did indicate that rates could go up temporarily as far as the GST is concerned. Do you look at that possibility? Is that at all going to be possible?
I certainly think it's a possibility because, on one hand, we're talking about rates being close to where they currently are, but there is also, the other objective of trimming down the list of exemptions. So the items that may be partially or in some form or shape exempted today may actually get into some sort of tax net. So there is certainly a possibility. No doubt in my mind that there were some items may actually see an incremental tax rate. So that is clearly there. My understanding of this 15% being the cap on cess will apply on general products, which are those 4 or 5 categories that the FM mentioned. But I do see the possibility that this 15% may not apply to certain select items like, the pan masalas or other things which are going up to 135, or tobacco products which may have a differential. So, of course, we will see the fine print, but I think this 15% is meant to be a cap of cess on those 4, 5, 6 luxury items. There may be other caps on the pan masala and tobacco products.
All right, other caps that you're essentially referring to, but completely out of time on this edition where we've discussed and debated crucial laws that have been passed by the GST Council, rules that still need to be cleared, and of course then the fitment of rates. So a lot more needs to be done. The Finance Minister no longer as assertive as he was a couple of weeks back on meeting that July 1, 2017 deadline. But we'll keep it with news and analysis and plenty of market action that hit lifetime highs right here on the channel. Keep it with ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.